Hey, it's Rishi and welcome back to Investing. I know that this channel is mostly focused on teaching teenagers and young adults about investing in the stock market. However, stocks are not the only financial assets out there. So today I want to talk to you about 6 different financial assets apart from stocks that are commonly invested in. These include bonds, commodities, futures, foreign exchange, cryptocurrencies, and ETFs. First off, what is a bond? A bond is a loan that you make to a company or government, and in return, they promise to pay you back the loan amount with interest at a future date. Let's say you and your friends want to raise money to organize a music festival. To gather funds, you decide to issue festival bonds to people who are interested in supporting the event. These bonds represent a promise to repay the borrowed money, plus some extra money as interest, to the bondholders after a certain period of time. So by investing in festival bonds, people become lenders and help make the music festival happen, while earning some extra money in return. So when you invest in bonds, you're helping companies and governments raise money, and in return, you earn interest and get your initial investment back when the bond matures. Bonds are considered to be more of a long-term investment, edging towards a couple years until reaching maturity. This is a very low-risk investment due to the fact that a majority of bonds are issued by the government, which creates higher chances to return the bondholder's principal back with interest. Bonds move inversely to the stock market. When the economy is doing well, people are more likely to invest in stocks because they think they'll make more money. But when the economy is not doing well, people are more likely to invest in bonds because they're seen as safer. This is because bonds pay a fixed interest rate, so even if the economy goes down, you'll still get your money back. The second asset that we'll discuss is commodities. A commodity, from the investing standpoint, is a tradable item or raw material that investors buy and sell in financial markets to potentially profit from price fluctuations. Commodities are often considered tangible assets, such as precious metals like gold and silver, industrial metals like aluminum and steel, oil, natural gas, livestock, and other agricultural products. When there is a higher demand than available supply for one or more commodities, the price gets inflated. Some precious metals and other commodities can act as a hedge against inflation as they are also stores of value. This means that they hold their value over time even when the value of other assets decline. The word futures itself surprisingly sums up a majority of the idea behind this financial asset. Futures are like agreements or contracts that allow you to lock in a price today for buying or selling something in the future to help businesses manage costs and plan ahead. These contracts are commonly used in various markets, including commodities, currencies, interest rates, and stock indexes. Investors use futures as a method of profiting off price fluctuations in various markets. Various businesses, however, use futures to secure certain prices for an asset and protect themselves from constant price fluctuation. It is also a way for businesses to manage risks associated with price volatility. Here's an example. Imagine you're the manager of an airline company and you need a lot of fuel to operate your planes. The price of oil can change a lot, and it's important for your business to have a predictable and stable fuel cost. This is where futures contracts come into play. You can enter into a futures contract with an oil supplier to secure the price of oil for future purchases. Let's say you agree on a price of $80 per barrel of oil and a future date when you need the oil, around 6 months from now. By entering into this futures contract, you ensure that you can buy the oil you need at the agreed upon price of $80 per barrel, regardless of whether the market price of oil goes up or down during that time. This helps you to manage the cost of fuel for your airline, as you know the price in advance and can plan your budget accordingly. If the market price of oil rises to $100 per barrel during those 6 months, you're still guaranteed to buy it for $80 per barrel as per the futures contract. On the other hand, if the market price of oil drops to $60 per barrel, you still have to buy it for $80 per barrel as per the contract. So, you've protected yourself from potential price increases, but missed out on potential savings if the price went down. Now, let's move on to our fourth asset. Forex trading, also known as foreign exchange trading or currency trading, is the process of buying and selling currencies with the aim of making a profit from changes in their exchange rates. The largest financial market in the world, the foreign exchange market, is where currencies from various nations are purchased and traded. Currency is always exchanged in pairs, such as the British pound Japanese yen pair or the euros US dollar pair. Each currency pair involves the purchase of one currency and the sale of the other. To predict which way a currency's pair exchange will go is the aim of Forex trading. You can purchase a currency pair in the hopes of selling it at a higher price and making a profit if you anticipate that one currency will gain strength versus another. Selling the currency pair with the intention of buying it again at a lower price and profiting from the difference is an option if you believe currency will fall. Speaking of currency, when people hear that word, they commonly think of physical coins and banknotes distributed by their respective national government. However, in the world of crypto trading, currencies are digital and exist solely in the digital realm. These digital currencies, often referred to as cryptocurrencies, are decentralized and operate on a technology called blockchain. Unlike traditional currencies, cryptocurrencies are not issued or regulated by any central authority, such as a government or a central bank. Instead, they are created and managed through mathematical algorithms. This special aspect of cryptocurrencies gives individuals the power to control their own digital assets and make transactions directly with others, without needing any middlemen involved. Examples of cryptocurrencies include Bitcoin, Ethereum, and Dogecoin. Crypto trading allows individuals to participate in this exciting new digital economy, where they can potentially profit from growth and volatility of cryptocurrencies. On to the last asset. An exchange-traded fund, ETF for short, is a type of investment fund that is designed to track the performance of a specific index, sector, commodity, or asset class. It's like owning a small piece of a big investment basket. For example, imagine you and your friends each contribute some money to buy a collection of shares from different companies. Instead of owning individual stocks, you all collectively own a share of the entire portfolio. That's similar to how an ETF works, except it can include a wide range of investments. ETFs are designed to track specific indexes or market sectors, and aim to replicate the performance of the underlying assets they hold. By investing in an ETF, you get exposure to a diversified mix of securities, which helps spread out the risk. Just like buying and selling stocks, you can trade ETF shares on stock exchanges throughout the trading day, whenever the market is open. All in all, ETFs are instruments that allow you to invest a diversified portfolio of assets through a single purchase, providing flexibility, cost advantages, and exposure to various sectors or market indexes. And there you have it. These 6 financial instruments, which are bonds, commodities, futures, foreign exchange, cryptocurrencies, and ETFs, all provide alternate avenues for investment. Remember, each asset class comes with its own potential risks and rewards, so be sure to conduct extensive research before actually investing. To be clear, I'm not any sort of financial advisor, as I'm just trying to post educational content. Thank you for watching this video, and make sure to like, subscribe, and comment any suggestions you have down in the comment section down below. Thank you for watching, and I hope to see you soon.